A still tentative American economy looked online today as digital deals were to be had and holiday shoppers lit up websites. Retailers had high hopes that Cyber Monday sales would add to what's been a strong start so far. If all goes as expected, today will end up being the busiest online shopping day of the year, with major bargains and steep discounts just a click away.
Every year we keep seeing more and more consumers shopping online. Both the younger consumer, which was born with a computer in their crib, they're very comfortable doing it, and the older generation is also now shopping online. Deals are becoming plentiful.
All told, the research firm ComScore estimates Americans will spend $1.5 billion online today. That would be an increase of 20% from last year. In anticipation, Amazon.com and other major online sellers are going all out to keep up with the spike in demand. And all this follows a successful opening holiday sales weekend that began on Thanksgiving night. The National Retail Federation reports a record 247 million consumers had cashed in on doorbuster deals in stores and online. On Friday alone, Internet sales surpassed the $1 billion mark for the first time. More now about the early impact of this shopping season and the broader economic trends. Nariman Behravesh is chief economist for IHS, a research and forecasting firm. Nancy Koehn has written about the retail industry as a historian at the Harvard Business School. And Neil Irwin is an economics editor and columnist for the Washington Post. Nariman Behravesh, let me start with you. What's the overview of the numbers so far? What do you take from them?
Well, there are a couple of trends, obviously. One is that the consumer's in a very good mood. For good reason. Income growth is decent. Jobs growth is, coming along, as it were. Housing is doing well. So consumers are in a pretty good mood. Consumer confidence is at a 4-year high. And that's getting reflected in the Christmas sales, if you will. They're solid. They're reasonably strong, 4 or 5% growth year over year. But as you were saying earlier, it's really the online sales that are booming. They're growing well into the double digits. You mentioned the 20% rate. That's about what we're expecting for this year compared with last year. So solid growth in terms of the total spending of consumers on Christmas goods and holiday sales and stuff. But the really interesting story is the online story, where it's just growing like gangbusters.
Well, let me ask Nancy Koehn, because we've talked about this expanded shopping season earlier than Thanksgiving and now Cyber Monday. How are retailers dealing with this changed? It's a landscape that's changed even from a few years ago.
Very much so. It's a landscape in which all these boundaries are blurring, the boundaries between brick and mortar and online, the boundaries between channels. It's like someone took a big, pink eraser and smudged all over retail. So smart retailers, everyone from, Neiman Marcus at the high end to Target, in the kind of high-low category, are figuring out how to use the web, including smartphones, right, including apps for smartphones, to draw traffic into their store, to increase their online sales, and to really try and make 1 + 1 = 3. And it looks like for places like Target, again, places like Apple, that strategy is working very well. So a changed game, a game that's really very dynamic, in which everyone is hunting and gathering, retailers for customers, customers for deals.
And Neil Irwin, there's still a lot of attention on this weekend and this sort of season as an indicator. But you've written that maybe it's not such a good indicator.
Yeah, I know we all love these stories of people rushing through the doors of the Walmart to get their television or all these sales, and everyone going online, of course, today on Monday. In fact, as a broader indicator of what's happening in the retail sector, it's not the best indicator in the world. It doesn't tell you a whole lot about what happens throughout the holiday season, what happens to personal consumption as a whole. That said, this is a very important season for retailers. This is an important season for the economy. And with all the uncertainty out there, to see a good start to it is better than the alternative.
Well, so what do you see, given pick up on some of the themes we just heard about?
Yeah, well, as Nariman alluded to, the American household is starting to fix its financial problems. It's gradual. It's halting. Debt service ratios are down to the 1990s levels. The level of household debt to GDP is down to early 2000s levels. So we're making progress in paying off these debts from the boom years. The job market is gradually crawling back. And actually, consumer sentiment, it stepped down a little in November, but was up a good bit in September and October. So American consumers are feeling better than they were a year ago. ago. The question is, how much does that translate into cashing their making purchases at the store?
Well, Nariman Behrovich, that is the if consumers are feeling a little better, are businesses feeling a little better? Are they investing? Are they maybe hiring? How does that work?
Well, in a worrying way, they're not. And we do have this disconnect in the U.S. economy between consumers on the one hand, and they account for 70% of the economy, but they're feeling fairly good about things, whereas businesses are not. And businesses tend to be more worried about things like the fiscal cliff. They're more worried about the troubles in Europe. They're more worried about the slowdown in China. So you do have this disconnect. The big concern now is which way is it going to go? Who's going to win this tug of war? So far, it's the consumer. But let's hope it's not the other direction, because as I said, let's hope that the businesses will eventually come around to thinking about things the way consumers are.
Nancy Koehn, I want to come back to you on this question of online shopping and the changed landscape, because does that have a real impact on does the rise of online shopping have a real impact on the economy, or is it just sort of shifting, transferring where people buy their things?
Well, I think that's a very open question, partly because this is so new, the marriage and the magic of online plus bricks and mortar. I mean, there's no question people are visiting, online websites more often than they do stores. Whether that adds up to kind of incremental organic growth is a question we just don't know, because remember, we're starting with all online sales from a much, much lower base than when we talk about brick and mortar sales. We're talking about hundreds of billions of dollars, $600 billion in predicted holiday sales. Only a small portion of that, maybe 20%, but much more likely somewhere around 10% will be online sales. I think some of that is really organic and new, but we don't yet have the numbers for this holiday season. As several people have commented today, we don't even know that this kind of momentum, which is very real, very significant for this 5-day holiday spree, much more than even the boom optimists predicted, whether that will continue into the long holiday season still ahead.
Neil, what do you look at and this question of online shopping? And is it its own thing? Does it add to the whole? What's its impact in the larger picture?
Look, people are going to spend based on their incomes and their jobs and their paychecks. Ultimately, whether that spending happens online at Amazon or in a store, it matters for the retail sector. It matters for all kinds of workers in that sector. But in terms of the overall economy, what matters is how much people are spending. It's one man's spending is another man's income, and getting to a place where more people have jobs, people have higher incomes. That's the goal, wherever those dollars happen to be spent.
And what's your reading on the psychology of consumers now? I mean, you were saying earlier that the debt overhang seems to be better. Is there a pent-up demand? Could we tell yet?
Not much sign of pent-up demand. One thing I'm worried about is that as this fiscal cliff issue, the tax increases and spending cuts that take place January 1st unless Congress and the President reach a deal, that businesses have been worried about that for months. Maybe consumers are starting to creep into their thinking as well. We saw a weaker consumer sentiment number last week. That's the kind of thing to watch, to worry about as we wonder what this holiday season is going to be like.
Nariman, I want to ask you, is it strange, or is it things really change? Because on the one hand, we want people to get out and spend, but on the other hand, we still talk about overspending and spending with money that people didn't really have was part of the problem that got us, that got us into this state in the first place. So that sounds like a little bit of a disconnect. Where are we on that?
Well, I think Neil's right in saying that consumer finances are in much better shape right now. So in that sense, the kind of spending we're seeing now is more sustainable, is healthier in a sense. Debt levels are down. People are not taking, say, home equity out to spend on a car or on a flat screen TV. So it's a much healthier kind of spending. So I'm much more optimistic that it can be sustained, it can be continued, and it's not going to be sort of a house of cards that's going to collapse at some point. So in that sense, I think there is room for optimism.
A brief last word from you on that, Nancy Koehn. What do you see?
Could not agree more. I mean, I think consumers are much smarter, much savvier, much more adaptable. You notice how much consumer sentiment bounces around month to month. That is not a capricious consumer. That's a consumer who's taking their pulse and adjusting their wallets and their spending very quickly without access to the kind of debt and house of cards financing that we saw for the early part of this decade.
Even, Neil, if they're lining up overnight, right, to get to the deal.
Even if they're lining up.
All right, Neil Irwin, Nancy Koehn, Nariman Bhairavesh. Thank you all three very much.
Thanks, Jeff.
Pleasure.
Thank you.